Hey.
Hey, there we are. There we go.
All right. One of the greatest, most accurate military movies ever, Commando. I love that movie. You just gotta appreciate it. That is 80s right there.
Oh yeah, for sure.
Oh, people blowing in all of a sudden. I don't even know. Okay, I'm on. Am I on Twitter? Do you know?
Yeah, I see that it shows a live video up on
Wait, how
your
do you know
screen.
I'm on Twitter? Oh, I
Uh,
see. Okay, it just popped up on mine.
yep, yep,
That
yep,
is trippy. I am. My
yeah.
cousin's gonna get a kick out of this. So, oh, anyway. So how's it going?
Oh, it's going all right. Just trying to end this week with a whimper and regroup and reload and go from there.
All of a sudden, I'm trying to wrap stuff up for the week, and like 7 promotions come on the canvas list. There's a promotion lists in New York,
Mhm.
so they hire off them. So it was like I got pinged like they must have all Friday like pinged for new openings. So it's like I got a whole bunch of resumes to send out. But it's
Oh
like
no.
they asked for a letter of interest,
Hmm.
and I'm like, the hell's a letter of interest? So I have to talk to my HR friend because I'm like, is
Yeah,
that a cover? Like, I know what a cover letter is.
yep.
So now I gotta figure out what the fuck a letter of interest is. Damn, people keep changing.
Yeah, all the different things. It's no longer just a resume and cover letter. It's this,
I
that.
didn't even know, like, I never even did a cover letter till about 5 years ago. Never
Yeah.
did one.
Yep.
I just thought you
Yep.
handed I get what a cover letter's for, and
Mhm.
it does make sense. Otherwise, you're
Yeah.
just handing resumes to people, and
Yeah.
they're like, "What the hell am I supposed to do with this?" So, the cover letter's explaining why you're giving them
Yeah.
your resume, basically.
Basically, yeah.
Like,
Yep.
yeah.
Yep.
And then you don't have to put every job on your resume. So, you
Yeah.
put you're like your 2 pages at most best, and then you can
Yeah.
have, like, a chronological list of jobs separate.
Mhm.
I learned that lesson, and I bring that to the interviews because then I would always get some jerk be like, "You don't have every job on your resume." I'm like, "Well, it's a resume. It's not a
Yeah.
chronological list of jobs." And then
Yeah.
I'd hand it to him.
Yeah. That's also what the interview which is what some people would say at
Yeah.
this stage
Well, I'm
already.
like I'm like, "Do you really why do you give a shit that I worked at McDonald's in high school? Like,
Yeah.
do you care?" Like, that's not on my resume.
Yeah.
Sorry. Neither's my work study in college. I
Oh yeah.
mean,
Yep.
I started at a certain point now, but
Yeah.
I'm gonna have a lovely glass
Oh,
of Gibson whiskey. This is one of my
very
favorite chill whiskeys. It's not my I have better ones, but this is a good one just to like just kind of in a mood. But
yeah.
you don't want to like go crazy with it. So
No, for me,
you can
it's
mix this with soda. This is a really good Canadian whiskey, like for
no,
non whiskey people,
very nice.
just for people to know. They took their equipment from Pennsylvania when they first started, and then they moved it to Canada because they bought a bankrupt bourbon company. It's kind of interesting
Ah,
to me. So
fun
so I'm
developments.
cheersing in my Ned Stark, which is kind of funny. We're toasting the devastation of Sofi and Robinhood. Well, the haircut they took this week. All right,
Yeah,
chill out,
yeah,
people.
yeah. Yep.
Cheers.
Yeah, I have water, but here we go.
Victory. I don't know.
Yeah, yeah.
People gonna be butthurt. I really enjoyed like the friggin' coping of because I follow like 3 or 4 SoFi like channels on Twitter now. It's kind of
Mhm.
like why I'm on Twitter. Man, they went ballistic. Was it yesterday? It was yesterday, right?
Oh, yeah, yep,
Or
yep.
Wednesday.
Yeah,
When all the
very
news
nice.
came out about like the big drop and the sale, like 3 of the executives sold like huge chunks of their shares. And man, these people were like every 30 minutes, they're freaking sending tweets out. I'm like, you people are like, if you only could see what you look like on the like from the outside,
Yeah.
if someone because you look crazy, like
Oh,
and
yeah.
they always name like I talked about this a little bit on the other video. They always call themselves like data analytic investing, future invest. Right? It's always
Yeah.
some fancy, they term that you think they're like some evolutionary innovative investor. And then they
Mhm.
pick one fucking stock and they pick a SPAC of all stocks, and then it's run by a dude who's probably the biggest grifter, brought the thing to the market. And then the other company is like a clown show that sells you, clown tokens
Yep.
with the worst CEO in America. People
It's
tell me they have a good user app interface. Like, okay.
yeah, yeah.
Oh,
Same here, that's my response is just, "Okay."
it's like,
Like,
wow. Congratulations.
Yeah,
Good for
yeah.
you.
Like I've used Robinhood in the past. I don't use it anymore for reasons. Like, yeah.
So,
Eh,
like, I enjoyed this week. SoFi got clapped, so
yep.
down. But look, the sentiment's still there.
Oh, absolutely.
Oh, yo,
Yeah.
buy great
Buy,
opportunity.
hold,
Buy the dip. Buy the dip. It's like,
strong
okay,
buy.
like maybe have some reflection. And I've said this before. It's like, okay, if you have some stock you have a thesis in and it goes nosedive like this,
Yeah.
like pause for a second.
Hmm.
Don't get emotional. Don't buy the dip right away.
Yeah.
It's their cope though, because they're like, well, at least I can buy the dip, so I lower my because they get the cost basis a little lower, and they don't
Hmm.
feel so shitty about it.
Yeah.
Um, and there's like no thought in it. I'm like,
Yeah.
and then I'd see some of them. They're like, well, I already have what I wanted in SoFi, but I couldn't resist this buying opportunity. It's like, what are you doing? Like,
Yeah.
you had a so you're telling me you had a certain allocation of SoFi, but now you're just breaking your own rules. So now we're like totally off the rails with this thing. But
Uh,
I can't believe like and
yeah. When,
they think SoFi is. I heard one of them said he thinks SoFi could be the next JP Morgan. That was
whoa.
I'm like,
Whoa.
that's what they think. I'm telling you, man. That's what
Like,
these SoFi people think. They think SoFi could be JP Morgan and that stock could be $60
oh my gosh. Like,
in the next like 5 years. Like you think, well, it's crazy. I'm like, well, I don't think that. That's what these people think this.
God.
It's a
Golly.
company that gives you personal loans. That's
Yeah.
what they
That.
do. They take your deposits, which they give you a shitload of interest on, more than any other bank, and they turn around and make personal loans out of it. And they have like that's what they do. I don't understand this.
Because.
Um, and like Chamath won. I don't know what I'll say. Chamath won because he brought
Yeah.
this to the markets and he, bailed on it. He got his bag and he ran. And
I'm
then
just. I'm just wondering. Like, SoFi's market cap is. It's north of 1 billion, but it's not. It can't be higher than 10 billion right now. JP Morgan.
6.5 right
Yeah,
here.
yeah, and JP Morgan's is like what, 425-ish bill
Yeah.
or something like that? Like just to go from like where SoFi is right now to one of the bigger regional banks, like there's going to be even more like probably some regulatory hurdles, and like once you hit that size, like just continue to grow, like that's
So
just
I
going to be a
enjoyed this.
challenge. Like what?
So yeah, here's the
Oh
uh
yeah. Yep.
chief
Good old
risk
Sulfur.
officer.
Yep.
Let me say this, the chief risk officer of SoFi sold like 35% of his stock.
Oh
Say
yeah.
it with me, people. The chief risk officer. And then the damn president of the bank sold like almost half his stock.
Yep.
And then it's hilarious. Anthony Noto comes out and makes a token pittance of a buy. And all the SoFi bulls, oh, look,
Oh,
Noto's with us. He bought like a few $100,000 maybe dollars worth of stock. The dude's
yep.
compensation package is like 100 million a year.
Oh yeah.
Like, who cares? Of course he was going to buy some stock. Like the CEO is going to buy the stock because he's like he needs to show his faith and upstanding with the investors. Um,
Yeah.
okay, that it's meaningless to me. And then you see after they sold on the 6th, that okay, now look on the 8th, all these people like were buying. It's like Noto got in the phone and is like, you better buy, you mother effers. This is going downhill. What are we doing? Like,
It's fun because like Lordstown Motors, the one that has gone bankrupt as far as EV SPACs goes, I remember they got a new CEO. The new CEO bought a little bit of shares. Well,
they
I mean,
forget.
I'm not saying that
Remember
the SoFi's going that way, but like,
before
come on.
Tattooed Chef went bankrupt,
Yep.
the CEO took out. He either bought shares or he took out a collateralized loan and gave it to SoFi or to Tattooed Chef. I don't remember which one it was. So you be like, oh, whoa,
Yeah.
he's there, he's with us, guys. It's like, no, CEOs, they're trying to they can prop the company up.
Yep.
They could try and they're trying to bail water as it's
Hmm.
sinking. Like
Yep.
I wouldn't put much faith in the CEOs buying.
Yeah.
The other people in the business, like the other, managers, like the president of the bank, chief risk officer, like that stuff matters.
Oh
Like the
yeah. Yep.
CMO, like
Yep.
those people more that's more concerning to me. But man. And they abandoned ship at a pretty decent time. I think they got like $8 a share when those guys sold. Good for
Oh
them.
yeah. Yep.
So you get that bag. But like, I really don't want to spend time on SoFi. I just
But
want to keep poking these people. I'm just
yeah.
like, you guys should reflect. I know you've already bought like 50,
Mhm.
60% of your portfolio is SoFi. So I'm sure you think I'm a clown. That's fine. You can think I'm a clown. I'm just telling you, you made a big mistake. If you
Yeah.
had bought 5%, hell, even 10%, I'm not gonna fight. I'm not a boglehead. If you 10% of your portfolio was SoFi, I'm like, okay, fine,
Yep.
go for it. These people, they didn't do that.
No. No.
And we know a certain one, Tanner. Tanner, I'm looking at you. Future
Oh no.
investing
Oh
took
no.
out loans to buy SoFi in the 12 to
Oof.
$15 range.
Oof.
Dude's
Ouch.
mega cheeks clapped on this right now,
Ouch.
but he still makes freaking copium videos on and shows it. And there's probably people really hurt. This is Tattooed Chef and Jeremy, Tanner, and so like they're
Yeah.
wrecking people's financial futures with these single stock channels. I
Yeah.
just hate it.
That's just oof.
It's irresponsible. I'd love to talk to him about it. And I know he's a
Yeah.
young guy. He's excited about investing. You're damaging people. You
Yep.
really are. And you're propping up just another bank. You're propping it up onto a pedestal it doesn't need to be on. It's just a bank. Like, let's go look. I pulled this up. So okay,
Hey.
we have the S&P financial bank or sector, and we have the regional bank sector or
Mhm.
index. These
Yeah.
are pretty well known,
Yeah.
right?
Yeah.
KBE, KRE. You can go look at
Yep.
what's in them. Compare them 5 years to VU. Obliteration. Like, look at this, people. Like, I'm telling
Yeah.
you, I will
It's
say
not
this until the
great.
cows. Banks are shit. They're a shitty investment. Like when people talk about banks, I just like
Yeah.
why?
Same
So
here.
many other cool things you can invest in. I'm not going to bash the Palantir people. Honestly, I never bash the Palantir. I think Palantir is interesting because the business has a future. It has
Mhm.
tailwinds. I
Yeah.
think it's cool. I think the CEO is a little bit of a lunatic, but they seem to have him like reined in, like the management team. I'm fine with that one, but like because there's a future to that. You're just debating like growth rates and valuation,
Yeah.
but that's not a bad. If you're going to speculate, that's not bad um, at certain prices. But this is like lunacy.
Yep.
There's no shape or form where this makes sense. SoFi.
Yeah.
Um, it's just a bank. It's not a technology. I can. Oh my god! Like if we can get
Yeah.
in this, it's not a technology company. I could show you the numbers. This Galileo is so minuscule to what they're doing as a part of their whole operation.
Oh yeah.
Um,
Yeah. It's
People are just wasting your time. I don't want maybe if I don't call it trash, maybe I just tell you you're wasting your time. There's better things to spend your time investing or looking at in
I,
investing.
I would say like we can even look with this chart, like moments where VU is on an upward trend, we can see that for like a lot of the banks, it's a little bit more sharp and pronounced of an upward trend. But that's when things are a space is very very financialized, and no duh, banks are very financialized. But if you see a downward trend, ooh, look out below, and banks anything financialized or hyper financialized.
And I've heard some people are saying, regional banks are historically undervalued right now. So I mean, that's a
Yeah,
short-term speculation. We're not talking long-term.
yeah,
So many people are like, we're forever, man. It's like,
yeah,
again, it's crappy investment. Let's go 10-year. Like,
yeah, boy,
oh wow, look at that. Look at that performance. Like, come on, people. Like, banks
yeah,
suck. I don't have any bank. I got out of JP Morgan. I didn't time I got out at like 140. I had it for a few years. It did all right.
yeah.
Nothing ground,
But
nothing earth shattering.
mhm.
So just the better things to spend your time looking at than SoFi, people. Like if I look at there's only 2 things I'll go over here. So
Yeah,
here we go.
yep.
Allowance for credit loss ratio. It's still
Mhm.
growing, 12%. This is like 2-3% at big banks. The allowance for credit loss. Like I think I looked at it once for JP Morgan. It was like 1.5 when I looked at it like 6 months ago. So like 1, 2, 3, 4%. Here at 12.7.
Oof.
And you can go read. And I know that I had someone once where they're like, well, their actual that's a projection of loss. So you should actually look at the current default rate on loans. I'm like, if you're paying attention to the current rate, you're screwed. you're already behind by the time it happens. Like,
Yeah.
this is forward projected,
Hmm.
you know, allowance for credit loss. So they're looking forward, projecting which loans they won't be able to get back or
Yeah.
to recoup if you want. So like, so that sucks. Personal loans are still the vast majority of their balance, and it's the most of their loan originations are still personal loans by far. So the narrative that it was they were going to get into student loans more. Okay, no, the percentage of originations of loans is still mostly personal loans.
Yeah.
Um, so I don't know what you people are thinking about. Like, here's
Just makes me gun
here's the
shy.
technology segment. Wow, look at that! Look at that stunning growth. What do you think of that, Bacon?
Oh, it's
Is that
profound.
stunning? 5%.
Yeah.
Oh, look here,
Definitely.
6%.
Yep.
That's
Definitely
stunning.
tech.
Oh my god. That is amazing tech freaking growth. Like, they're
Yeah.
taking the world over in like
Yep.
2,000 years. Like, what
I
the hell? Like,
just
they're already topping already in the technology like, the revenue production on it's pathetic, and they're growing accounts. Like, who gives a shit? It's about generating money, and it's
yeah.
it's not. So, enjoy go for it. Prove me wrong. Maybe it goes to $10 and you're gonna laugh. I'm like, well, it'll just come back down again, and um, I don't know. Maybe
Yeah.
if it goes to $5, we'll see what happens with me.
Uh, yeah. I'll
Guarantee I'll make more money than these people that are long term on SoFi.
yeah, yeah. For me and SoFi, I don't have a dog in the fight. I'm not long or short it, but like I just keep remembering and recalling like people that have like just talked with bank experts or financial services experts. They're like, this space is very, very easy to get caught off sides. And if
Yeah.
you're well connected and you get blindsided, like uh,
It's just
uh,
like, oh, they got this huge competitive advantage. Like, okay, the other banks have the cash flow to invest in technology.
yeah.
Bank of America, Wells
Oh
Fargo,
yeah.
some of the
Yeah.
bigger regional banks,
Yep.
they can catch up real fast.
Yeah.
But maybe they don't want to. Maybe they look at what SoFi's doing and they're like, meh.
Yeah. Yep.
Like, these people like, oh, they're behind. I'm like, well, maybe Jamie Dimon maybe he's laughing in his office. He doesn't give a crap. Like, well, wow, look at that cute personal loan freaking book they have. You think he cares? Like,
No, no.
so
Odds are almost
if they wanted to catch up, they would in the technology. And um, a
yeah.
full service bank, I'm not switching. USA is amazing for me.
Yep. Yeah.
It's an established online bank. They give me what I want. They don't say no to me. Everything's free. I don't get feed on anything, I don't think. So online banks have existed for a while. This is not new. But then like they don't have and like, oh well, it's an advantage they don't have physical locations. Like, well, there's income banks can produce for being in physical locations, like
Hmm.
cashing checks for people. They
Yeah.
generate fees
Yeah.
because
Yep.
people just come in and want to cash it. There's a lot of degenerates that don't have bank accounts, so they go to banks and they'll charge you a fee to cash your check.
Yep.
They have deposit boxes, so they almost are like a storage facility in their basement or
Hmm.
wherever,
Oh yeah.
and people store shit at banks and they get
Yep.
rental fees.
Yep.
So SoFi doesn't get that. Like, and those things are dependable sources of income in good and bad times for a bank.
Oh
So
yeah.
that storage fee doesn't go up and down with interest rates. It's just whatever you charge that person to have that box. So there's
Yeah.
advantages to having physical locations,
Oh, for sure, and not even
not
in
all
the bank.
negatives.
Yeah,
So
like not even in the bank space. Like even like e-commerce direct to consumer companies. Like some of them have said, yeah, you know what, we're pivoting into stores, and some of them have produced numbers saying, hey, stores not
oh my
that bad of a business model. Uh,
Dex, that
oh
guy
no.
is he's a piece of shit.
Oh
I
geez.
I the, man, he pisses me off. And he came after me once.
Did he?
Uh, I think because I said one anemic thing about SoFi.
Oh no.
Responding to like somebody online said I think it's data driven, isn't it?
Oh yeah, yeah. Maybe.
Data driven investor. This
Oh.
guy, like SoFi, so like you go down
Oh
more
geez.
SoFi,
That's
SoFi.
just painful.
He went crazy Thursday, nonstop, and this guy just rubs me the wrong way. This is so
Yeah.
irresponsible. He just attacks people, anything negative. And then maybe if you're on Twitter as an investor, you look at this guy and he constantly just floods Twitter with nothing but positive stuff about SoFi. and he bashes you if you say anything negative. They can't do anything wrong. So I think you're a clown if you ever watch this data-driven clown show.
God forbid anyone say anything
Yeah,
counter
you're
to
hurting
the
people
thesis.
also.
Like,
So this is a very speculative investment. It's a
yeah,
SPAC startup. It should be
yep,
very speculative, small portion of your total holdings.
yep.
And you know these people aren't like
No, no,
none of these SoFi people. No, they're like that 97%, half their money.
ugh.
Tanner's probably like 80% SoFi.
Just leaves a bad taste in my mouth. Like, ugh.
I don't know. Like nothing stopped them yet. Some of them are
Yeah.
probably half lost. Some of them bought it 15. Like, how high did it get? Yeah, it
Yeah,
was
there
up
we go.
in the 20s. I mean,
Yep.
and it popped a little here, but there's people probably down 50% on this thing.
I
It's like,
wouldn't be surprised.
but you're going to want to prove me wrong. That's what they're going to want. They're not going to listen. They're going to be mad at me. I'm an idiot. And they want to prove me wrong, and they're going to buy more. And then they're going to laugh if it goes up like 5%. Like, oh, wow, stunning.
It's like that meme where it's just like all red line and then just a tiny
Like they don't
smidgen
want
of
to see
green.
compare. Okay, let's look at my HVAC Carrier and Tran holdings beat the market this year. Cigna's up over what it was up 25, but down like 20% out. So, okay, we can have receipts. While you've been bag holding SoFi, like I'm up like double digits on Disney now. So go to hell. You suck. You're just wasting your time. Like you're wasting your time with this thing.
Yeah.
Opportunity costs are hitting you.
Oh, for sure. For
All
sure.
right, that's enough SoFi.
Yeah.
Screw this thing. No, we'll talk about Robinhood.
Robinhood. Good old
This will be
hood.
quicker. I mean, do you know anybody that's honestly bullish? This one's not so. I don't feel like it's so like SoFi covered. Not so
Yeah,
much.
I don't, but like I could see the rationale and I could see people not knowing as much of like basic accounting or basic financial statements and how to read them rather, and being all crazy and going all goo goo and gaga for Robinhood because yeah, number is impressive, but I don't know if this is stealing your thunder, but interest revenue, like how much do we really want to weigh that and
Wait,
consider that?
Jesse, if you want on, I'll send you the link. Jesse's
Good old,
always welcome.
oh yeah, good old Jesse.
My partner in crime.
Yep.
But
Shout out to the exit
I
liquidity.
mean, if someone
podcast.
wants to, Strongman did like 10 minutes on this. Okay,
Yep.
hold on.
Yep.
I try not to beat it. Like if someone Strongman does really good job covering financials on companies, which
Yeah.
he's a CPA people. Like
Yeah.
I understand financials, but I don't
Mhm.
have CPAs or can like teach it better. Like I just have an understanding for myself. Not
Yeah.
everyone that understands something can teach the thing at the same goddamn time, but
Oh, for sure, for sure. And even then, like things definitely change over time. Like I remember for a while there, like the term SBC is such a broad umbrella, and I looked into a thing called phantom stock. And I've had to ask around like different accounting people that you and I both are aware of, for like how would the accounting mechanism like for that work, and how would it play out for the financial statements, because not all SBC is exactly the same. Some we a lot of people probably know of RSUs and options, but again, phantom stock is should be considered under that, and act accordingly, people. I'd say.
but like looking at this, all right, like
Yep.
we've already I mean, well, some people are like, why should you talk about this? It's already been covered. I'm like, well, no, we're gonna cover it again. Net
Yeah.
deposits
Yep.
down,
Yep.
pathetic. Ooh, gold subscribers, who cares?
Woo.
Assets under custody
Yep.
down.
Yep.
Oh, here he is.
Hey, there he is.
What's going on?
How's it going?
Good.
This is my victory lap for SoFi.
Yes.
No,
For
gotta enjoy it.
SoFi
Sofi and Hood. Yeah,
and,
he's got
and
his
Disney, right?
Yeah,
Disney,
I don't know.
my fellow shareholder. Welcome to the gang.
Hey, I'm also in Disney. Yeah, I got a long
Hey,
position.
let's go.
Yeah. Yep.
all my I don't have to love everything I buy. It's like I have a lot
hate
of
most of the
friends.
stuff
I have a
buy.
lot of friends that are very Disney people, so I get it. You go to
Oh,
Disney all
man.
the time up there? Your escape from the mountains?
No, I don't know if I've ever been to Disney.
I was when I was in high school. I'm going next August. I promise.
The last one I went to was Universal? That's the other one, right?
Mm.
Because I went to
Yeah, we're gonna split. I want to
Harry
split
Potter
Universal.
World and all that.
Yeah, so we're gonna stay between them, and we're gonna do 3 days at Disney, 2 days at Universal. I think.
Okay.
Nice.
Yeah. Yeah. Depending on how you pace that out, should be all right. Like anecdotally.
Well, Virginia Beach was my test run because we walked everywhere. I was walking 15,000 steps a day, and the kids could handle it. So
yeah,
I think we're gonna be okay for Disney.
All right.
Just come to Washington beforehand and hike a couple mountains with me.
Oh no,
man, training.
But yeah, good old Hood. Good old Hood.
What a great ticker name for an appropriate company.
Oh jeez. Yeah. Yep.
I don't think people flood the internet with this love so much like SoFi.
Yeah.
I don't think I've seen a specific Robinhood channel like SoFi, but what the hell are you buying here? It came out at the perfect time. Maybe it could have come out a little earlier, but hey, the clown market, everyone had stimmy checks, and here's an app that works and looks good, and people can play with stocks on their cell phone.
Yep.
There you go.
Hood and Coinbase IPO'd at the perfect time. All of those companies that SPAC'd.
Oh, Coinbase nailed
went
it.
bankrupt. A lot of those companies, they went public, right? They IPO'd right at a perfect time, right? So,
but here it is, same sort. Yeah, assets down. I mean, I don't know why this is surprising to anybody. Growth down. So it's topped. This is it. The company.
Yeah, but interest income, man. Come on.
I mean, buy a bond if you like interest income.
I
why are you buying a company they could
Hood.
generate cash from their money? So can you. Fucking
there's so many solid companies out there that oh my god.
That. Oh, look at this. It's such garbage. Go and anybody that buys this, I'm like, have you listened to Vlad talk? Seriously, you're gonna invest in that dude? He's so bad talk. It's the worst CEO.
No thanks. It's just
and their user base hates him now, right?
Yeah.
They kind of screwed the pooch on the I don't know, on their on GameStop. They kind of got in bed with Citadel and screwed that over.
They're sitting on a big pile of cash, bro, man. Look at that big pile.
Good cash.
It's down though.
Yeah.
Look at that cash.
Anyways, I'll harp on people think here's users, right? Monthly active users. It's flat for the last 3 years, and the thing I keep harping on, and then here's another Robinhood average revenue per user. Glory days are gone.
Yeah.
Wait, so they're still on a GAAP basis. They're still unprofitable.
Yeah.
Oh, yeah, I believe so.
They had I think they had some adjustment. That's why they were profitable last quarter.
I was gonna say
for some reason I thought they were profitable.
This is the death of them right here.
Yeah, the account size.
I don't need to show you anything else. This is the death of this company. These companies need clients with cash. That's what they do. They hold your cash. The average balance, I think, of Schwab was $250,000, or Fidelity. I think it was even more.
It would have been
got a bunch of low FICO garbage, accounts with $3-4 grand in it. That's it. So
yeah,
this is not a business. That's not a business you can grow.
Certainly not a great
you
one.
You have to squeeze fees out of these people because you can't just get management fees by holding their money or anything like that. They don't have any. So you have to you got to get them trading. You've got to get them buying crypto. You've got to
it's that order flow, man. Order flow and gold memberships.
Yeah. So,
but anybody
bottom of the barrel for so long, and then they've pretty much done it.
But realistically, how long before you go from a Robinhood to like a larger, more established broker, right?
Oh,
Even
yeah.
if you're like a good trader, like, and you actually like for somehow make good money on Robinhood, what are you gonna do? You're probably gonna go to Interactive Brokers,
Mm-hmm.
right? You're gonna graduate and you're gonna leave, like, yeah.
I know.
They're
Or
C-tier brokers for a reason.
or you can be like look like Strongman. He has
Yeah.
a clown account with like 500 or 5 or
Yeah.
maybe 5 grand. I think he had at one point, and then
Yeah.
he's got like $500,000 at you know, the real big boy banks. So
Yeah.
or you get degenerate
It,
people that buy and sell all the time and this is all they got. Like
Yep.
it's where people go to like, you know, have fun and gamble a little bit.
Yeah, that's what I'd say.
So
Yeah.
are you a buyer? Fabio gaslighting us. We were like, this is trash. He's like, so you buying it? It's like,
You buying it?
buy
I
what?
mean, like,
Not for me. No thanks.
I'm not shorting
it's down.
it,
It's
but
down so much, so it has to go up eventually, right?
Yeah, wait, all-time highs, bro. It could go back there. It's just why can't it draw lines?
Yeah.
Okay, so how could they be a good business? Is it even possible?
Okay, Vlad is fired immediately. You bring in a
Vlad's a
competent
fad.
guy from like you bring like the right-hand man of Jamie Dimon in. I don't know. How do you fix this? You start getting rid of the clownery of the interface, and maybe I don't know. You've got to build that reputation.
Yeah, I was gonna say that's yeah, it's gonna be a turnaround.
How do you build that reputation where people would want to hold $1 million in this thing?
Yeah, yeah,
But
that's where it is. Like
it's like race to the bottom. It's like the ultimate race to the bottom,
yeah,
right? And you'll give them that, you know, they did do some good for the market just in bringing like low cost trading,
mhm,
you know, into the environment. But the big boys are going to absolutely destroy them.
yeah.
So, I mean, yeah, like why would you choose Robinhood over like a Fidelity? It just doesn't make any sense, right?
you're all wrong. You're
Oh
all
yeah,
wrong.
Unless
yeah.
oh,
24-hour trading is the game changer.
game
Game
changer.
changer. There and then
addicts can.
It's a buy for tons of reasons. So I don't know what reasons.
Also, like 24-hour trading has been available forever for crypto on Robinhood.
Yeah.
So like, come
go
on.
ahead.
And crypto is going to have the best spreads. It's going to have probably the best payment for order flow. It like that's where the majority of their really profit is probably going to come from in the volume space is crypto.
Mhm.
And it's not like they've had 24-hour trading for crypto for how long? Like ever?
Yeah. Oh yeah.
Like people like
You know?
yeah, more or it's almost been like 20. You can trade from like what 4 to 6 o'clock. What's after hours go till or 8?
Oh, after hours.
For
I don't
goes,
know.
so you got
Is
after
it like
hours.
6 or 7
I can make
EST?
trades. Yeah, I can make after hours. I can do
Yeah.
morning trades.
Mhm.
So that's not anything new. They've just stretched those times a little bit. And
Yeah.
honestly, like it's not the same as normal trading people. Like
Oh yeah.
there's no intermediary. So when these extended hours, you have to put in like limit orders. So there
Mhm.
has to be a buyer on the other end. You sell, there has to be a buyer.
Yeah.
During the normal market day, you could just sell to like Schwab. Schwab could just take your stock. You don't have to have necessarily a buyer on the other side.
I used Robinhood to buy Dogecoin for like
Oh dear God.
0.0003 cents in like 2019.
Those decimal points would really matter in this case, actually.
I had
it was stupid. It was like $20 that turned into like 5,000 or something like that. It was like
I had during the
I was
clown
like,
market,
we'll just like
I had a Bitcoin and I had like 3 Ethereums, I think, which was I doubled my money on the Ethereum. I didn't hold it till like it was crazy high, but
yeah.
I think what I literally did was I took $100 and I went to every single crypto that they had, which was like I think they had 5 or 6 trading at the time. And I put $20 in each of them, and I just like forgot about it. And then I randomly found out like years later, like, oh, Musk is pumping Dogecoin. And I look at my account, I'm like, holy crap!
I had like $20 of every coin on Gemini. Yeah, I did like that, and then I sold it. I got scared, and that shit was failing. But
Yeah, I think I
when
got
FTX
out.
hit, I'm like, all right, I'll take that out. It's not fun anymore.
I got out of Doge between like 30 and 60 cents or something like that. I just started selling.
So you were better than the Doge millionaire.
Oh no.
Dude, I feel like, yeah, people don't make the best decisions, obviously. We know that, but like I feel bad for that guy, man. Like, come on, dude. You were sitting on 3 million and you're like too proud to freaking take half off the table. Like, come on. That
Yeah.
especially, when you go from, I mean, it didn't seem like he had a lot of money in the first place. He took a decent amount out just to buy that much Doge. And then it's like the perfect example of when you're right and you're still wrong, right?
Mhm.
Like you can be right, but if you don't exit, you're still wrong. I was thinking about doing a live reaction to this on my channel.
It's all good. I
Bacon wanted to do this. I'm
Yeah.
not you guys. I don't know Dave
Oh.
Ramsey really.
All right. So the video, like what's been going around Twitter, is an old David Ramsey clip, and apparently caller like rings in and says, yeah, I'm worried about retirement savings, and the topic is withdrawal amounts. Now, what Dave Ramsey gets at is, his whole thing. If you know Dave Ramsey's shtick, is he's picked the right mutual funds, average about 12 point change, returns, positive returns a year on average. So with that in mind, Dave Ramsey proposes 7% withdrawal rate if you're conservative, 8% realistically, because if the average interest rate, or not interest, if the average inflation rate is 4%, you can pull out 8 and still have your returns, your retirement savings compound over time. Now the problem is that there's a lot of faulty assumptions that I just want to like nitpick here and there. I'm not gonna give anyone like any real financial advice, just things to consider here. Jesse, you may already know this because we've already talked a little bit about this, but averages can be very, very dangerous. Nassim Taleb has said, just be careful of trying to swim across a river that's on average 4 feet deep, because it is very possible for you to drown. Yeah, averages have a very bad tendency of hiding things. Like if you pick, like, say, the S&P 500 as an index, or any grown up big person index of total market or what have you, like a lost decade is very, very possible, like both previously and in the future. You should expect that. And what happens when that happens? So like the whole premise of like, lower digit percentage like withdrawal rate may be worth considering. The other thing worth considering is, I'm not saying to copy and paste them, but pension fund managers, they have a very, very they're very focused on like defined liabilities. Like they know what the payout has to be. Therefore, they try to, in theory, they try to manage their investments and tailor it around that. Maybe that's a way worth thinking, but yeah, just be careful out there. Like these like, I know oftentimes 401k and Roth IRA type structures are viewed as investments, but I think there's a strong argument to view these as savings and treat them as such, and be a little bit more careful, especially as you get up there in age. That's just me. So
he-
fire away.
Oh, go ahead, Jesse.
Have you guys ever played with Sea Fire Sim?
See Farsum? I'm not familiar.
Yeah. I'm sharing, Dan. I don't know if you want to share my
Yep,
screen.
go ahead.
So this is basically a retirement calculator,
Mhm.
but it's specifically for withdrawal rates
Yeah.
and looking at sequence of returns risk across different type of withdrawal strategies within retirement. So this would be your typical, like your 8%, because I think he touted like oh, just take 8% out a year
Yeah.
or something like that.
Yep.
Like 8% was his withdrawal rate. So this assumes like a static value of 8% of the current, like the starting portfolio upon withdrawal. $1 million portfolio, 80,000 a year. And yeah, it's not too good, Bob. Like the success rate on it, I think, is around, oh shoot, is there more data? Yeah.
Wow. Look at that.
Yep.
Yeah. So the success rate is only about 38.21%.
Is this like a Monte Carlo simulator?
Yeah. It
Yeah,
looks like
it's a Monte Carlo every year going back to 1850.
Oh.
Over the 30-year, the defined period. So we have a 30-year period from basically retiring in 2023, and then you croak in 2052. You don't need money. So the spending is inflation adjusted, so it starts at the $80,000, and then inflation adjusts that $80,000 every year, and then so this is Dave's essentially like, oh yeah, 8% is fine. That highly depends on when you start withdrawing, and usually you would think like if you're going into retire, like if you're set on retiring after you hit a certain number, just in general, right? The market's most likely going up when you hit that number, right? Because as time goes by, market gains is going to make a bigger impact than like you actually contributing, right?
Mhm.
Especially if you
Yeah.
have $1 million in your portfolio, 10% is 100 grand, unless you're doing that every year. But so you're almost at like a higher risk of being in a bad place when it comes to sequence of returns if you're just going off of that stack value. Because like if you have a 40% market pullback, or let's say 50% worst case scenario, that 8% withdrawal like is now in year 2 like 16%. That's like madness, right? Like that's insane. So yeah, it's absolutely crazy that he would suggest something like that. And I don't even like, and I'm not like, oh, do a 3% withdrawal rate. I think the whole standard scheme of kind of the Trinity study and the 4% withdrawal rule is really flawed for several reasons. So we can run a 4%, and we'll get simulation 2 here. And obviously, so 8% withdrawal, you can see that you deplete your nest egg pretty frequently in these various scenarios. 4% is, so it has a success rate of 38.21%, and then on the 4% withdrawal rule, you get about a 95% success rate. But and that assumes that you're taking out a static value every year. What I'm personally aiming for is I'm probably going to end up trying to do a hybrid dynamic withdrawal strategy where like I'm confident that if I really need to, like if the market tanks and I need to phase things back, I can cover my core expenses at a pretty low withdrawal rate. But then if the market's ripping, like, and things are good, then I'll probably take a higher percentage out. So if you did something like that, and specifically the one that I've looked at is that you do spending plan would be a percent of portfolio. And then if you do 4%, or 5%, sorry. And you do a spending floor of like, let's say 5%, but my spending floor is going to be a defined value and 25,000 or so. So, and this I feel like is actually potentially a realistic scenario when you get closer to retirement. Like if you don't have a mortgage, a lot of your debts are paid off.
Yeah.
You have a lot less recurring expenses. Then your core expenses are going to be pretty like tight. While your, let's say, luxury expenses, vacations, like doing stuff, whatever you want to do, that can be more dynamic depending on like market fluctuations throughout your retirement. So this is something that I've looked at, and it's a 5% of portfolio every year, right? So that value that you're spending changes every year based off of what your portfolio is in the last year, but you never are spending less than 25,000. And in my mind, that number should just be the number of your core expenses. Like worst case scenario, you can like go down that amount.
Yeah.
If you do something like that, you get some pretty interesting results. Obviously, you don't have any failures because you're doing a dynamic spending and you're cutting back in bad times. But you're on average, you're actually withdrawing about 6.5% of the initial portfolio value because you're allowing yourself to spend more in good times and then to potentially rein back and not get as hampered when the market takes a hit, right?
Mhm.
So in this type of scenario, your floor spending is at 25,000 at your core expenses. You're allowing yourself to spend more. If you retire and the market is just like ripping from when you retire, you're allowing yourself to up your spending. Because really, I mean, do you want to just die with no money with like $10 million? Like,
Yes.
I don't, not really. Like,
No, I'm spending.
I
No,
want
I'm
to
joking.
spend
I'm
it,
joking.
right?
Yeah,
Like, I want to spend it. So I think like there's a lot of like, it's very one-sided. It's a very static rule when you look at the Trinity study, or you look at like any type of like just static, like I'm going to take this amount out. Because life's going to happen and things are going to change. So like you almost have to, when I look at it, I almost want to build in some type of flexibility into my potential plan, so I can be like, hey, you know what, in these conditions I'm gonna spend more. In these conditions I'm gonna, you know, either be saving to like saving from the good years so I don't have to deplete my portfolio in bad years, or I'm just gonna allow myself to, you know, maybe I'm not doing Europe vacations every year or something like that, right? Like
Yeah.
I still say
yeah.
make the video.
It's interesting because this is a different I've been planning based on, I knew I was always gonna be in the government. So I knew I was gonna have a pension. So my planning is a little different. I'm not like a index boglehead type person. So I've always like, okay, I just need like, if I can get like $1,000 a month in dividends, then that will supplement that growing dividend fund. It supplements my Social Security and my pension. I'm there. So now I'm like, well, I want to get to 2,000 a month. Like if I wanted to crank it, I could turn I could get to 5% pretty easily. Pretty responsibly, I could get a 5% yield. So different boat. I don't have to like, so I'm not thinking about like, I'm living off my pension and then I just want the growing dividends to cover like inflation for me. Because I don't think my pension, it's debatable if they keep up with cost of living. It depends on like the state, but
yeah. Well, I think a lot of people too, like people that have solid pensions, and there might be people that between their pensions and their Social Security, that is almost like their core expenses, right? So that might be their ability to pull back in hard times where they're not draining their portfolio. They're letting that ride and they're just living off of those that Social Security and that pension that they have. But all of this kind of goes back to like, you have to know what you're spending. Like you have to be tracking your spending, because if you don't know that, then you don't know crap. Like it doesn't matter what somebody recommends to you, because like you're going in blind, right? Like
the only thing, so I watched the video Bacon sent. So the critique, if I remember, Dave Ramsey said, if you're saying 4% pulling out of your fund to live off of, he said the problem is now you've doubled the amount of money you need to do a 4%. Because things are more expensive, and it's going to dissuade people from doing it because it seems very unattainable to like have $2.5 million at retirement. Like 1 million does seem attainable. Just even by just a Roth IRA, you could probably get there.
Also, like
that was like his big point I saw.
You think about it, right? And like just with well, it depends on market cycles, right? But with average market returns, like if you get like $1 million like in investments by the time you're, I don't know, like 55 or something like that, on average I think the market doubles every like 8 years or so, 8 or 9 years. So it depends on your timeline, but if you hit that threshold like at a decent age, you know, that 1 million is going to turn into 2, going to turn into 4, like pretty quickly.
I was going to say like that.
So
periodicity does certainly matter. It's
Yeah.
It's just like for me though, I just, I think everyone here knows that I have a bias towards at least considering the downside. So, like my respectful counter to Dave would be, it's still good for people to at least consider what could go wrong in these things. I know that he'd counter with me, well, just pick the right mutual fund, stupid. And I'd be like, okay, Dave, sorry, you got me. But yeah,
Yeah.
I don't have any right answers here. All I have are just trails of different thought processes for people to consider. That's all I
Yeah.
got. Just consider.
Well, yeah, and none of us are financial advisors. None of this is financial advice.
The
But
Stone Cold Investors disclaimer.
it's so
Yeah.
it's so dumb because like it's such a personalized like situation, like
Yeah.
personalized
Oh,
to every
very
single
much so.
individual.
Yeah.
So
Yeah.
like giving a blanket like
No.
8%, like
Yeah.
or
Shouldn't be
whatever.
done.
I hate that.
Yeah.
They give you this
I-
feeling that you have to attain this perfection, and if you don't, you're a failure.
Yeah.
Yeah.
And I can see why people would just
Which-
be like, why even do this? Why not just
Can I point
put it in
something
the
out?
mattress?
Yeah.
Can I point out the irony of how Dave saying 8%, even though I haven't watched it or anything,
Yeah.
basically goes almost an opposite of everything else that he does because he's so risk adverse. He's like, don't have debt, pay
Yeah.
cash for everything, like
Yep.
have a huge emergency fund. And then he's like, oh yeah, take 8% out of your portfolio a year. Right? Like,
Yeah.
if he was being true to like what he actually like preaches in every other aspect of personal finance, he'd probably be like, oh, 2% safe withdrawal rate. Go get $8 million saved up or whatever, right? Because like it
No,
just doesn't
geez.
make it
Yeah.
like it's totally counter.
Mhm.
Totally counter.
All right.
Anyway,
That's rough.
my
So
rant.
do you want Disney or my ETF purchase? Somebody pick.
I lean towards the ETF purchase, but that's just me. I'll defer to Jesse and to the comment section.
Wait, what? What are we doing?
The next
Oh, we got
topic
plenty
for
of time.
the
Oh,
section.
next topic.
Yeah.
I have an ETF I'm into now, which is interesting. Or we can watch Disney.
Thanks.
I feel
Big
like it's
Pharma
like
Show.
called Chad or something.
Chat. Where'd it go? Oh no.
Let's see what the people have to say.
Big Pharma is being very helpful.
They hate us.
Jesse said pensions.
Yeah.
Give me what they want.
Oh.
I mean, they're granted, yes, the careers that offer.
All right, I'm gonna
pensions
pick. People are slow.
All right, there we
So-
go. Cool.
I've mentioned this with Andrew. So I am buying this one.
Yes, the one
Wisdomtree
that I
Cybersecurity
asked.
Fund. So I made my first purchase.
Hey. I think we kind of talked about this. Or
Yeah, I've talked about with you and Andrew.
yeah.
So for people like I like the thesis on artificial intelligence as it relates to cybersecurity.
Mhm.
So the defense, not exact. I'm not investing in the companies that will benefit from AI, but the companies that will defend the people who benefit, I guess.
Mm.
It just makes a lot of sense that there's going to be, and I've read some articles and some studies like AI is going to affect cybersecurity hugely in the future. Like companies are going to have to defend, people are going to have like artificial intelligence bots or I don't know who even knows attacking.
Mhm.
And there's so many good tailwinds, I think, for this industry. But the way I'm playing it this way is because I'm not a computer guy. I don't know anything about cybersecurity. I just want to pick all the companies and have some sort of professional like help me in this. So I'll pay I'll pay the fee. So with this one, it's they have a venture capital firm helping them make their stock selections. So it's not just Wisdomtree's analysts or portfolio manager doing these picks. So it's kind of cool. This is an article they wrote. So this is the company that's actually doing it. It's like an Israeli cybersecurity venture capital firm.
Hmm.
So they have like think tanks and stuff, but when they make the picks for this ETF, they have like this network of cybersecurity professionals. This is what they're putting on their website.
Yeah.
Across the world. They said they have a network of like hundreds of cybersecurity specialists they consult for making these investments. So For someone like me that doesn't know, I don't have a winner, and I don't really want to pick a winner. I think my thesis is the whole industry is just going to benefit from this. So, and there's only like 30 companies, so it's not like hundreds of companies to choose from.
I got a question for
that's
you.
my spiel. So you could just pick CrowdStrike because that's a good one, but I don't know. So
why did you go with something more actively managed versus just a market cap weighted sector fund or something?
I looked at one that was I think the market cap weighted for such a small ETF, it's like 30 companies. The market cap weighted one I found, it was so heavily weighted towards like the big ones, like the ones that had the biggest market cap.
No.
CrowdStrike. And I'm like, I don't know if this
probably
is
a
the way
reason
to
for it,
do.
but-
I don't know if this is the way to do a specific industry ETF like this, is to go by market cap weighting.
Yeah.
Because then you could get 25%. It's CrowdStrike.
Yeah.
Because it's not like a broadly diversified field. It's only 30 something companies. So I don't know. In this case, I like this one is active in the way that they have cybersecurity consultants. And the expense ratio is not out of hand. It's like 0.5, I think.
Okay. For active managed, that's not horrible.
What's the ticker again?
WCBR, I think. Feel free to yell at me if I'm wrong.
I also like Wisdomtree in general for people. I also have them for other ETFs. So
I was gonna say based off of like digging around.
D-Dog, Zscaler Crowd, PanW. Did you guys see that Arista is launching their zero trust solution with Zscaler?
Oh, really?
Yep.
So you can see their picks. So you got CrowdStrike, Zscaler, and Palo Alto, which I hear you guys talk a lot about. Datadog, Cloudflare, Rapid. So I'm like, okay. Fortinet's not that. And the market cap weighted ones. Fortinet's very high up there, but you might not like.
Well, I mean, I think we all know how I feel about Fortinet.
Big
they better have Palo Alto on here.
Yep.
PanW.
So they got all the ones I've heard you guys.
Okay, I approve. PanW is
approve?
higher than Fortinet, so I approve.
That was part of it. The companies you talk about, Andrew, I noted, and I see this methodology gets them there, which is part of it.
This is actually a really interesting.
People, like, you can get into something you don't have any core competencies in yourself. Like, this is a way you could do it. For me, anyways, I feel comfortable. So we'll see.
What's the expense ratio on it?
0.45. You can see, like, here's the peers. So they're all.
That's not bad at all.
Yeah, man. I was gonna say for active managed, that's really not bad at all.
And there's no like front end or back end loads.
No. So here's like the big one, iShares. This is the biggest one. It's only 600 million.
iHack. Oh my god.
I didn't even know some of the companies in this one. I was like, what the fuck? Is Booz Allen in here? I'm like, oh my god. So I think this is not a pure play cybersecurity. They also bring in elements of other businesses for this ETF. It's got more holdings. So I think they didn't want to have only 30 holdings. So they stretched the definition of what this ETF would hold to not just pure cybersecurity.
Big Pharma actually being considerate in the comments. Yeah.
That's the other way to do it. If you feel that you have an if you know something about these companies, I don't.
If you got the edge,
if you got the edge, then you might Palo Alto, CrowdStrike. Maybe you think they're going to keep winning. Then go. I'm not debating. Good for you.
Yeah.
It's a really good example of betting on industry and sector tailwinds. Then not only industry and sector tailwinds, but the specific companies within that sector that's going to benefit the most. Right?
I think it, like odds are, like, unless the thesis around the sector somehow falls apart and blows up, it should do all right. Like,
but like even like for the state, we have CrowdStrike now.
Yeah.
It's only in the last few months we got CrowdStrike. I'm not exactly sure what we bought. But yeah, that the state has, so like we're spending more money on this stuff because we're also doing hybrid work. We never did that before. That's the other thing. Hybrid work is creating a need for this cybersecurity services more, like for that alone, and artificial intelligence. So there's just all these factors that, I mean, like there was a report they wrote about I was reading.
Well, it's
this
hard too
earlier.
because like you're gonna have like big tech is gonna be competing in this as well. Like Big
Yeah,
Pharma said,
yeah,
Microsoft, like
yeah.
absolutely, like Microsoft, Google.
Yeah.
I wouldn't be surprised if we saw a lot of big tech competing in
Yeah.
these areas.
That being said, though, like if you are a S&P 500 total market or total world, you
You
probably
don't have to worry about
Yeah, I
it.
was gonna say you probably already got the exposure there.
Well,
So it's,
yeah, and
eh, you know.
and
You know
that's
what?
the case where like
Chris likes
maybe
this.
you want a little bit more
Wait,
exposure.
what?
I talked about this briefly to Chris.
What?
He
Wait,
didn't
what?
have any problem with it, so I'm just saying.
Okay,
As a
dang.
speculation, I mean, all you're doing,
Yeah.
let's say you own VT and then you bought this as like a side speculation.
Yeah,
All you're
yeah,
doing is slightly modifying your allocations
Mhm.
to something
So
you think might, do a better return.
Roughly
it's
intermediate
funny
time
because
frame.
he's like pretty much all VT, right?
Yeah, yeah.
So no matter what we own, he's always a fellow shareholder.
Just
In
about, yeah.
Hood, SoFi. We should be like, hey, why did you buy Hood?
Yeah,
The
this is
problem that
true.
we get go online, you'll talk about this, and you and Andrew say talk about this, and someone out there is going to be like, yeah, this is so great, and they're going to put 30% of their portfolio
Oh,
in
yeah.
Palo Alto and CrowdStake right now,
Yeah.
but
Please
they're
don't
not
do
going to
that,
hold
people.
it. They don't have the knowledge backing, and
Yeah.
it's not going to work for them. And then they're going to think it's your fault, and it's like, no,
Yeah.
you did this to yourself. Like,
I feel like that only happens if somebody has FOMO. Like they feel like they're gonna miss the train. They want to like rush in, and then you do something stupid.
X, you should have said I could. This is all distraction from Amazon. It's
Yeah.
the true
Come on, man.
answer.
Jeez.
Every podcast will just be you should have bought Amazon today. I mean,
Yeah,
Yeah.
pretty much. Even though if you're like majority indexed, like and
Oh,
the
look
upper
at
bottom
you.
index, yeah.
look at this guy. He's got to go after.
He's got
We had an
jokes.
armistice at some time. I'm lock and loading now.
Oh
Okay.
no, not on Veterans Day. No,
I've never heard a bad thing said about Wisdomtree online. Everything's positive, so I'm living in the clouds.
yeah.
Nothing can go wrong.
Based off of my previous like small digging here and there on some Wisdomtree funds, it's not bad. It's not bad, all things considered, I'd say.
Basically, my Roth IRA is where I put stuff like this.
Yeah.
Like there's SCHG, SCHD, and then I've got this, and then I might add a semi ETF. I'm not sure yet. I'm not sure we've bottomed out on that.
So this one would be like what, intermediate, roughly like 1 to 3, 5-ish years range.
I don't know. I'll just start plugging my Roth money into this.
30 years, long
30 years.
term.
So, anyway,
I mean, so here's the thing with cybersecurity is if these players if they grow into it and their fundamentals, the economics behind the business line up right, it could be one that you hold for a very, very long time.
Yeah. Also, the Pentagon
cybersecurity is going to be the most rapidly changing technology field ongoing for probably the foreseeable future.
And the Pentagon budget's going into this quite a bit, which the Palantir people love, but no, good. That might work out. Like I said before Jesse came on, I'm like, I don't hate Palantir as an investment, but we can just debate valuation.
Yeah, I was gonna say that's really about it.
It might work out. There's other players in that space, though. I'll tell you, Palantir people, you're not as special as they tell you they are. But
yeah.
So that's that. What's left? Disney.
Yep. If and everyone wants to, I'm
up
for it. It's funny that we're all in Disney. I didn't know that.
I was waiting, and then opportunity struck.
Yep. Oh yeah. In hindsight, I mistimed my entry into Disney, but it's fine.
So many people hated it.
Oh yeah, yeah.
Well, it's a boomer company, or they're blah blah. They're woke. I'm like, okay.
Yep.
Are you gonna wait until they put movies out that are not woke to buy it? You're too late.
Yeah.
Like,
yeah.
So,
right price and the right movements that you see, it turns out, you had an okay entry opportunity.
So, Mike, What did you think? Did you look at it, Jesse, or do you want me to say what I thought? Or
Don't know if we lost Jesse.
Um,
Oh, there he is.
oh, he
No,
moved.
I
Okay.
haven't looked at Disney yet.
So like, cash, so we're like turning the bend basically on some of the negative trends that they had been in the last few years. That's the big.
I kind of heard, some things here and there, but mostly like cost cutting, cost controls, like gaining operational efficiencies. Right. Like, doesn't that sound similar to something else that ripped like a year ago?
Yeah. Like this is why it went up 10% like in one day. This right here, this one spreadsheet or slide.
Yeah. Yep.
I mean, that's incredible. And I wasn't like when I projected valuations, I wasn't even projecting revenue growth really, honestly.
No.
Because I'm like, I don't think the solution for Disney wasn't to grow any bigger. That's what got them into this problem in the first place, was this pursuit of revenue, my avenue, was why they got in this mess. This is about trimming the fat at this point.
Yep.
They have good streams of cash, like their revenue's fine. They need to be more efficient. So this is what and some people honestly, like if you're a lot of people are like growth investors on YouTube. So you're like, if you don't see like double digit revenue gains quarter on quarter, you think a company's trash. And like, you need to like move on from that view. There's other ways companies can benefit, not just growing their revenue. And there's problems with companies that pursue revenue growth, like
at the cost of everything.
Yeah, just like the meme for Thanos. What did it cost you?
Everything.
So what's the biggest trap for growth investors?
Ooh,
I've got an answer.
Oh, you got an answer?
So beyond that, obviously what we just said.
What's the biggest trap for growth investors?
And it can be like broad. Mine's really broad.
Their obsession with like capturing market share too.
Yeah, I was gonna say that is a big one that I've noticed. That is a commonality. Like
I feel like
sales numbers too, like unit sales of whatever they're selling.
Mm-hmm.
I'm gonna go with the cyclical industries.
Ooh, that one's fun.
Because typically those will boom and then bust. I feel like they are the biggest trap for people that are focused on growth.
Yeah. And then because when you do those valuation tools, they project the same growth forward.
Yeah.
People here, like any of you with Everything Money software.
Oh no.
You are projecting the same growth number like infinitely forward when you use that stupid thing. So
12, 14, 16.
Yeah. Oh my God.
So like chip companies, Enphase, all those good ones.
So the one, what surprised me here, the ESPN numbers surprised me, but I knew the summer they laid off a bunch of workers, they cut expenses in the summer. It's showing here. The numbers for ESPN were pretty good actually. Parks knocked out of the park.
Yeah,
there you go.
Yeah.
How's
I'm pleased. I don't know. I mean, I wasn't even expecting the Disney Plus subs to go up.
Yeah,
so I didn't really care if they
That's
did.
what I was thinking. Yeah.
Yeah, same.
So
here,
that was one of the things when I was looking at Disney. I was like, I don't think people appreciate how quickly their streaming services are growing into profitability.
Yeah.
I did not think that people like understood like kind of the cusp that they were on with just that segment of the business. Because they were on a pace quicker than Netflix to get, I believe, to profitability.
So they were like, if people could picture, Disney was taking all their revenue from their legacy or from legacy cable and from their entertainment division and ESPN, and they were sucking it into this vacuum black hole that was Disney Plus, building out that and Hulu. Now Iger's like, let's turn that off. let's go back to a normal. Let's put money back into the parts of our business that do generate high free cash flow, like the parks and cruise lines. And ESPN is not dead. We're not effing selling ESPN. Like if they sold ESPN, I'm out. That would be such a
Really?
bad idea. I think that's so stupid and short-sighted. That is such a great brand. You know, it's been beat up a bit, but why ESPN's a brand.
Yeah.
Like I don't know why you would sell that. And you're not going to get what you think for it. I don't think.
Yeah.
But the ESPN bets now, I showed Jesse. So they took Sports Nation Facebook page, or was it Twitter? It was one of the streaming. So they changed that to ESPN bets. Yeah, and then so now they're starting the transition to the betting platforms now that they have to deal with with Penn. So, and Penn Gaming took the big hit getting rid of Barstool, not Disney. If people,
yep.
They sold for $1, right?
Penn took the bath on that, not Disney.
Mm-hmm.
Yeah, they took a $500 million write-off, I think, if I remember. On that,
I feel like we just got like give props to God, what's his name?
Portnoy.
Dave Portnoy.
Oh my God,
dude, he
the
sold
greatest
that for
business
what,
deal
like,
ever. Yeah,
he got like what 50 million out of that or something like that, and then like buys it back a couple years later for $1.
He says he still has a ton of Penn stock, which I don't know if he sold it. I'd keep it. Shit, why not?
He probably day traded it away. Ding, ding, ding.
You see the video of him day trading where it's like he was all happy.
Oh my God, dude. He was a mess, man.
Yeah, slowly
he was like trading Boeing and crap, and like, oh my God, dude.
Boeing.
Yeah. Yep.
I know.
Good old day trading.
Oh, he's still talking about cybersecurity. So, anyways, yeah, we're like positive here. I'm happy. Honestly, the stock might take a hit because of the bad news for the Marvels. I'm expecting that to happen. The Marvels is going to the Marvels is one of the last projects before I think the end of the woke projects. So I think this will be the start of the transition next quarter to the next phase. But yeah, they're going to take like a $200 million bath on that movie, I think, which, you know what, it finally, that'll be a good end cap on this garbage they put out, like just to lose a ton of money on it. And why would anyone want to see that movie?
Yeah,
like,
I say they got
superhero, and I love superhero stuff. And it's like, what have we done? Like, that's superhero movies now. Like, I grew up on Batman, you know, and freaking like Michael Keaton Batman, and then even the Spider-Man, Tobey Maguire movies. And it's like, that's what a superhero movie is now. Yeah. Okay, cool. Brie Larson.
Yes, I am drinking from a Glencairn Pharma.
Good old big.
We are men of sophistication. Here.
What? That's right.
I'm a man who drinks water.
You gotta smell it. You gotta.
Oh, he's got the carafe, or is that a carafe?
It's the Glencairn.
Okay, I have those downstairs. I just didn't pull them out for this.
This is a bourbon, a local bourbon that's finished in port cask. It's pretty good. Pretty good.
I should have pulled my Pendleton out. It's downstairs. I haven't opened it yet.
Yeah. Dude, I got oh man,
20-year age Pendleton. Love it.
I got 2 bottles of the Elijah Craig barrel proof C923, and that stuff is amazing. It's so good. Oh my God. I was gonna Disney. For me, it's sitting, what is it? I think it's like a 3 or 3.5% allocation for me right now at an 87 cost basis. I'm kind of bummed I didn't get it a little bit lower, but
81.
Still 81. Oh man, you got the low was what, like 78 or 79?
Yeah, well, certain people bailed on it when it dropped after the first buy. I'm like, the thesis is intact. Like,
yeah, my first buy, I was chilling. I was like, okay, you know, like,
I was considering in the low 80s. I was considering adding into it a little bit. But I was like, if it got to 70, I think I'd be forced to add.
It touched 79, I think, for like an hour.
Yep, like briefly.
No, I was meaning like low 70s. Like if it like flushed down to low 70s, I think I'd be forced to add. That was like my point where I was like, okay, I need to take more. But
dude, I'd put like 30,000 into it if it dropped that low. Like, easy money.
Bye.
Don't say that. No, why did you say
30,000, a whopping 0.4% of his portfolio.
Guys, risk is on. The market's risk on.
Oh no. Oh no.
Guys,
If you know, you know.
the market's risk on.
Yeah.
Let's go.
I'm like, I didn't know the market knew it was risk off or on.
Yeah.
Is there some button like in in Wall Street in the back of the stock exchange that somebody just cranks it to risk on?
A bunch of statisticians.
We
just,
need
like,
to make a GIF that has the like fear greed meter, and it just goes like this.
Risk on, risk on.
That's the crux, because I find this stuff out. Some of this I don't know it, and then I'm like, yeah, like a few years ago, I'm like, what the fuck's greed and risk? Why is there a meter on CNBC?
Yeah.
Oh my gosh.
Why do
man.
I care?
Dex, nothing is a layup. Layups don't exist. Only the perception of layups exist.
It's all about taking on calculated risk, basically. I think at 80, and I thought at $80, I had enough wiggle room, because I thought it was, here's like everything money always F's this up too. I thought it was worth 120, 125 at 80. I still think it's worth 120, 125 at 90. Like, but like everything money would run models at both prices and create different endpoint valuations. And I'm like, that doesn't change every fucking time you run it. Like, it's not how you do this. Like, and that's why they need 50% like nose or bats in every company to buy it, apparently.
Yeah. And even when the rare moment where that drop does happen, then it's like, nope, it still needs to drop another 50%.
Oh, let's look at 3M, $92. Still shit. Cool. What a great buy from him. He bought it at like 96.
Lovely.
I'm sure he'll lie about that at some point.
He'll spin it as a dividend investment. Just wait, everything money dividends.
Like all your fancy software and research, and you buy 3M. Like, really? Just buy the fucking market. God, like, what a useless investment. Like, and I'm a dividend guy. Like, buying 3M is useless. Like, God.
Oh boy, I'm sorry.
I crushed you with my HVAC company.
I know the feedback is like for me to try and not laugh as much, but that is really funny.
I just think a lot of people waste time. Like, do you really think 3M is going to outperform like SCHG? Like, no.
It's such a big
well, let's say not even the S&P. Like, okay, a growth fund, like a good growth fund, SCHG. Like 3M's not going to beat that. It's like you're wasting your time looking at it. Like,
man, is Prime Video really that high?
Like, I think Carrier will double or triple in my life, or KLA. Yep. When I bought that, I'm like, this thing could double. What a great company, and it's done pretty well. Like you're wasting your time on some of these companies they talk about online. Yeah, I think, but whatever. Well, here's streaming. So I guess this is beyond Disney, but I thought I pulled some streaming charts. So
I did not realize Prime was that high.
I didn't either. That was the first thing I thought, honestly. I'm like,
shocking.
I thought it was Netflix.
I almost don't believe that. Like, how is Prime higher than Netflix?
I thought Apple was higher than this too. I didn't realize Apple was such a small share. So but if you add Disney and Hulu together now, Disney and Netflix are so now it's three horse race basically for the win.
Yeah.
So it's interesting. Like, I think the field's set at this point. Nobody's merging, buying anybody. This is the field. So it's kind of interesting. But
I think Paramount could get gobbled up potentially.
I was just gonna say, which one do you think is the one to fail? And I think
if anyone,
because like Apple TV, like they don't need the money, they don't care. Right?
Yeah, I don't.
They're not going to sell that off. It's just going to be a value add service.
Yeah.
I mean, you add Disney Plus and Hulu together, and it's the largest.
Yeah, it's pretty darn big.
I don't know I still don't know if I believe that,
they
though.
Dumped into this, and this is where we stand. Like,
yes,
I have a really hard time believing that Netflix is below Prime. Like, that just does not.
Don't let certain people see this.
Here's another chart. This is from last year, not from this year. So I couldn't find anything quickly for this year. So like the streaming chart share, pretty similar information.
10% Hulu for those that have difficulty seeing it.
I mean, obviously it says HBO Max because it was last year. It's interesting. Yeah, like as far as purchase, like it's tough because like I don't know. Is there an investment here? Like I'm in Disney, so I guess that.
Yeah.
Amazon, you're buying the whole Amazon company, not Prime.
Yeah, I was
Netflix
gonna
is
say,
the
yeah.
purest, if you bought into it, great.
Mm-hmm.
Paramount, I think you should be concerned about Paramount and
I think so.
Warner Brothers, honestly.
Yeah.
I wonder if my source has updated data now.
Financial modeling prep or something else?
No. So I'm sharing my screen. This is let me zoom in here. So this is called the Global Internet Traffic Phenomena Report.
Mhm.
So this is the 2023 release.
Oh, okay.
Well, no, that says I swear, yeah,
It's
2023 PDF.
Yeah.
Okay, so and then I used to work with this type of DPI equipment, and they release global data for traffic trends that they're seeing.
Mm-hmm.
And you can see Netflix is still growing pretty dang well. What is this? APAC? Where is this? So Netflix is still like way above all these other players. Amazon Prime is barely even on the map. So I don't know if I believe your chart, Dan. I really don't. I don't know. I think the data they might be getting is bad, or the charts potentially looking at like growth rates or something for those. I don't know, but let's see, brand, because I do not. I doubt. Yeah, so Netflix is the number one video, followed by YouTube. Then Disney Plus, Amazon Prime coming in 7th, Hulu coming in 8th. That's kind of what I would expect.
Oh, this didn't have YouTube on it, so.
Oh yeah.
App total volume, and then this will
So
even
yours brings in more companies. Okay.
Yeah.
So.
Yeah, and this will even break it out by like I think streaming onto phone versus streaming onto web depends on the data that they release. But yeah, I think Netflix is still generously in the lead. Yeah, 10 video apps, downstream, upstream, total traffic.
Yep.
Yeah, Netflix and YouTube, which I think, man, I think YouTube is really slept on, man.
Oh,
I think
yeah.
YouTube's a lot more valuable than the market gives it credit for.
Are you saying that because this is being streamed on YouTube?
Yes.
Okay.
And I just got monetization, so I have to say it now.
I was like, wait,
congratulations.
Well,
hey!
I'm under approval for like the
okay.
first tier. I still need to get up to 1,000 subs to actually get like AdSense, I think. But
I need like 400 more viewing hours, and I'm there.
Yeah,
so I'll be there by Christmas. I think. I don't know. I'm gonna start spitting out
I
good
should
dog
just
videos.
after I get 1,000 subs, I should just do a live stream for like 24 hours and see.
Oh no!
Try to get those view hours up to that 4,000 threshold.
Yeah,
and then I can make $3.29 a quarter.
Yeah, this is all you guys. This is not me. I don't have a YouTube channel.
I know. And I can't wait to make $5 a video.
Yeah, I'm good here.
I don't know how people make a living off this. Like that's crazy. Like you still need a profession. Like
I'm sure I'll probably make way more off of my FMP referrals than YouTube.
I could see that. But it's
like really. So like, what? Like the problem with streaming is to say I'm investing. Like the only pure plays are like Netflix, Paramount, Warner Brothers.
Well, pure plays, yeah.
Yeah, I was gonna say pure.
Yeah, it's like a lot of it's big tech, and then you got to worry.
I mean,
like Disney's, I guess mine technically. I guess I didn't really buy it for
Disney.
Streaming,
you could argue isn't even a pure play.
Yeah,
no,
this is true.
Right. So what? Paramount, Netflix, Warner Brothers, Discovery. I think you could consider that a pure play, right?
Mm-hmm.
Yeah. I'm still bitter that I got in and then out of Netflix at like 180.
Yeah, these
So
things happen.
stupid.
Could be worse. You
Yeah.
could have screwed up your exit out of Meta like I did. I mean, you
Yeah.
still made profit, but
I mean, looking back,
and
I
this
never should have sold a share of Meta.
yeah,
But I still
hey,
hold
if you're indexed,
healthy
if you're
position.
indexed, you've had Meta the entire time.
That's right.
these companies get a lot of exposure just because of like you're on one of them and streaming, and like there's a lot of movie YouTubers and a lot of the movie entertainment YouTubers cover also, like to some degree they'll cover like the financials of these streaming companies.
Mm.
So it's very, yeah, I mean, it's very prevalent on YouTube just by some of that. But you'll have a guy that just talks about Disney all day, which is so wild. And like they'll have 1 million subs, and they probably make a living just bashing Disney and their wokeness.
Big Pharma, to clarify, I did not day trade. Oh no, wait, I lied. The way how I screwed up my exit, I did technically, partially day trade Meta.
Death by 1,000 cuts.
Embarrassing, but yeah.
Dan bought a new ETF, Goth. Okay, wait, is that an ETF?
Is that? I don't know. I'll take a look. Why
No.
not?
Oh my god, I want
If
it.
it is.
If that's an ETF. I hung out with all the goth kids. I didn't dress goth, but I hung out with them. So
Oh, you're a
no,
goth at heart.
I was. No, I am. I would wear like Old Navy. I was too chicken to wear like the stuff they were wearing. So I'd wear like Old Navy stuff and hang out with the kids with makeup and earrings everywhere.
Thanks, Google. The closest thing it shows is a Global X ticker
Yeah,
symbol.
you lie.
GT
There's no goth.
GXTG. Yeah.
That's gonna be my fund I create. I don't know what's gonna be in it though, but
Yeah. Oh
goth
boy!
themed
Oh boy!
pants.
Yep.
So, well, good. It's an interesting time as always.
Oh yes. Yep.
So we didn't talk any macro, so that was good.
Yeah. Yeah. We avoided.
What are you guys
macro.
most interested in right now?
I'm kind of deep diving like semi and fabs right now. I think we're like a down cycle, and I think from now until like next summer, or maybe late next year, might be a really good time to buy these companies.
Yeah.
And also, I was looking at an HR company that specializes in like hiring like software and tech workers, because also with artificial intelligence, like these workers are going to be harder to find, I think. Which
Yeah.
they're going to have to spend more money with hiring firms to get these specific because you're going to have like, okay, we need like a computer programmer. Now we need them with specific skill sets that we haven't asked for before. So you're going to have these HR companies work harder, basically. That's about it right now.
I've been looking just out of a learning basis for like furniture retail. I know that's really random and probably dumb and probably a waste of time, but I just want to see, like what
You
type
had
of
your
demand has
taste
been-
with Crocs, and now you're like, oh, I want more clothing.
No. Like again, home goods and furniture retail companies. Just to see like how much demand has been pulled forward, and if there may be something there. Probably not. Odds are probably I'm like early on the research stage, but just curious.
I'm really interested in the HCMs right now. Paycom, Paylocity.
Oh yeah.
If those can get a little bit more, just a little bit more weak, like I'm hoping we're not at the bottom and we're still in the downtrend.
If you bottom ticked it, I'd laugh. I will laugh.
No, I definitely didn't bottom ticket because it bottomed at like 145 or 147, something like that.
Oh, okay.
I got in at like 155.
Alrighty.
But dude, I don't know, man. I just if it played out right and it like gave me enough time, I could see myself, and I saw enough development, I could see myself going into either Paylocity or Paycom a bit heavier. It would have to play out, but like those really interest me right now. Crocs, man, I might do a little
I got pinged a lot this
here
morning
and there
because of that.
Why is that?
Fabio, he's trolling me. Even though I specifically said it's not for him, and I actually meant it, but
Yeah.
Yeah,
Well, like
can't win.
the funny thing with Crocs is like it doesn't even have to grow. Like
Yeah,
if it
yeah.
just it can even go down, right? Like they can slow down probably 20%. And as long as they maintain margins and then normalize, like,
Yep.
dude, it's gonna be like a buyback story essentially.
Yeah.
I'm like, at some point they will pay off the debts for hey dudes. I
Yeah.
mean, and then it's an afterthought. And
Yeah.
But like what's their leverage ratios even at right now? So actually,
It's not like there's been
let me
far
here.
trashier balance sheets that I've seen, especially in
Let
that
me
space.
let me see.
Like
I'll share something.
then
Okay.
again though, like me saying trashy balance sheets in that space is like I'm reminded of Capri Holdings because they got acquired and a certain someone and I were looking at Capri Holdings before the acquisition. So
So let's
ignore
look at
me.
this together.
ignore BaconMemes idiot and posting.
Because I noticed that they slowed their debt pay down now that they have their leverage ratios at their target rate, and then they picked up their buybacks, right?
Yeah, which was really, really shocking to me. I didn't expect them to be that early, even if it
Yeah.
was.
So I mean, their debt actually I think ticked maybe up a little bit. And then buybacks, I think they got a pretty nice chunk. Yeah. So they had a decent amount of buybacks over the last quarter. So I feel like as long as their cash flows remain like consistent, they're probably going to keep that up.
Probably.
Because let's see, what's the REIT metrics? Okay, net income, operating cash flow. Now, obviously, this is not a REIT, but I just kind of like to use this. So yeah, their operating cash flow, interest expense, total debt, operating cash flow, just total debt. So yeah, I mean they could get their leverage a little bit better, I think.
Yeah, I was gonna say could be better, but
it definitely could be better.
Yeah.
Cash flow coverage ratio is about 23%, and their what is it? Come on. Interest expense is probably right around the same, 23%. So 23% of operating cash flow is taken up by interest expense. And their operating cash flow equals in relationship to their total debt is about 24% of their total debt. So yeah, if they got that debt down to $1 billion and their cash flows remain consistent, that would put them in a way, way, way stronger position. But at the same time, it's kind of like, I don't necessarily disagree with them buying back shares here.
Yeah.
As long as they think that their cash flows are going to remain consistent,
Mhm.
because they are trading objectively dirt cheap, like dirt cheap. Yeah. Yeah. So
no, I'm good with it.
Yep.
I'm not adding any more though. But yeah, I like it.
I think I've still left giving me some wiggle room to add more if I wanted, so I'll be fine.
Yeah, I left room for like low 80s, and I still haven't used that room, and I'm being a little bit more patient.
Yeah, because I have cash on the sidelines.
I think it could go maybe retest those low 70s areas.
Yeah, could
potentially.
Sure. Yeah.
So
I'm not shorting anything, so I got the scratch. I need to.
Hey.
I've sold all of that, so
Yeah.
I'm pretty cash actually in my speculation account now.
Oh.
But
hey, nothing wrong.
I need to
with
pull
that.
some money out of it. There's too much money in it.
Yeah.
I don't keep a lot in there, so
Yeah. Alrighty.
Speculate with U.S. Treasuries.
So
like all in leverage. Let's go.
just as a way
there's
for me to
certain things
try.
I am not a bond person.
Oh.
Maybe when I'm 50, I don't know. I want to buy a Microsoft bond, corporate debt. I've always thought that's like a Hermes bag for me, or Hermes.
Dude, I'm pretty sure, like, doesn't that like pay less than U.S. Treasuries? I'm pretty sure their debt, I think, is higher rated than U.S. Treasury.
Yes. Yeah.
I want them to give me the bond, and then I'll carry it around and just show people randomly, like, "Hey,
frame it."
I own a Microsoft.
Microsoft is indebted to me.
Yeah. Guys, I'm a partial owner of your computer.
All
You
right.
owe me.
So for me to try and extract more value from you guys, because I'm greedy like that, for the viewers, what do you guys have in the works for your respective YouTube channels?
Oh,
Well,
boy. I just finished the 2 that I said I was going to do.
Yep.
So.
Yep.
I was gonna do a reaction video to that Dave Ramsey thing.
I
but don't know
still
if I'm
think
gonna
you
do it
should.
right now.
No, I still
I
think
probably
you
should. Maybe
Yeah,
maybe
you
I'll
should.
do it tonight and try to get posted tomorrow.
Yeah.
I feel like that's one of those topics that like maybe it pops, maybe, but
Yeah.
it'd just be fun to do a reaction video.
Yeah, I see
But I think I don't know. Well, I don't know if we want to mention that yet. I don't know if it's official or not, but
Nah.
we have Dan and I might have some collaborative efforts that we're thinking about doing.
Yeah, I'm the pain in the ass about it, but
I'm laughing because I know what it is, and based off of what some people are saying behind the scenes, I may be included. So we'll see. We'll see how it all goes.
I still like
We might
doing my own.
sprinkle some bacon bits on
Yeah.
it, you know?
Yeah.
Well, like a lot of people around me, I'm not negative, but you guys all have individual stock channels, and I haven't really wanted to do that necessarily. Like if people get tidbits of individual stocks and live stream, so be it. But I to like, I don't know, like the output of like individual stock investment ideas. Sometimes I'm just like, oh, it's tough.
No, I got.
It's
I
a
got,
grind almost to some
Yeah.
degree.
I get where you're coming from.
I like talking markets and other stuff too. Like literally the only reason I did an individual stocks YouTube channel was to try to record my like process on doing an analysis. And I was able to create a format where I was like, oh shoot, I can just start kicking these out. And it just kind of grew from there.
Yeah.
And I still use it to where I'm like, what was I thinking about like Disney or AMT or KRC or whatever it is, Meta, Google, Amazon. I'll go back and I'll rewatch my videos because I'm like, shit, what was I thinking about that again?
Like I did a stream with Andrew about my thoughts about like Carrier and Tran and HVAC. So I didn't specifically talk about those stocks, but you could watch that and be like, you could kind of get most of my thesis. Like, did you really need me to specifically talk about Carrier and price targets? Like, you have the broad strokes of my investment idea.
Yeah.
But honestly, people just want to copy you and they're lazy as shit. And I'm just like, I'm not as nice as certain YouTubers. Like, some of my ideas I just don't want to give out. I'm just saying. If I do like a crap load of research and it's mine and I've done groundwork and talked to engineers, like, why do you get it? Like, I'll give you tidbits if you can put it together. But like, you got to fucking do some work to get. Otherwise, you're going to go find LaFufu.
Yeah,
if
pretty
you
much.
just want to copy someone, you're going to follow LaFufu and lose a lot of shit, a lot of money.
Besides that,
or any of those crap, or Tanner. Fucking, I should say Tanner from now on. That guy,
Tanner.
Future investing.
Well, it's also why like I started focusing like really, really heavy on valuation because I feel like that's not, I don't know, shared a lot. Or like, I feel like everybody does valuation a little bit different.
Yeah.
And depending on the person, like you can get a lot of information or like, I don't know.
So big time.
You can take things from a lot of different people on how they do valuation.
Yeah.
And you can kind of like build that up yourself.
I can
so
feel like
kind of what I focus on.
Like, I know you care when you do those videos. I guess that's the way I would put it. Like, you're not just doing them just for clicks. Like, I know you care about the company you're talking about. It's not, you're not bullshitting through it. Like,
the amount
of
these like
people, you're just
comments
like, wow,
that I get that are like, are you buying? Are you selling? What are you doing? Like, they can't tell what I'm doing. I'm like, well, that's kind of the point. Like, I don't want you to know what I'm doing. Like, all I'm doing is like laying out potential scenarios and talking about how this could potentially play out. Like,
it's
hopefully, maybe you have more knowledge into the industry and the company. You're gonna have like a better, like, I don't know, like you're gonna hone in better on like what the actual probabilities of these different scenarios are playing out. But like that's what makes you successful. Like I don't want anybody to really, I don't know,
blindly
I don't want
copy.
to. I don't. Yeah, I don't want anybody copying me.
Like if I was you, your whole ANET thesis, I wouldn't have shared that with anybody. That was like my carrier investment was your ANET investment. I would fucking no, that's you. That's your bag. Like I wouldn't have shared that with anyone. It's like a treasure. like you had the knowledge, you had the resources and the competencies to make that work.
Yep.
I
So,
still wonder if there were certain people in the Discord that I posted that to that took that and ran with it. Because I didn't hear anything about that company until after I posted that in November of 2022, I think.
I just like the things after the fact because Dan may be sick and tired of this one, but Triton, like Dan, you and I both were shareholders for a while there, and we didn't know until after the fact, which was pretty fun. But yeah, I think I personally think like at least learning.
Well, the one actually, I was thinking about buying preferred shares of that Rexford REIT.
Oh,
that was being discussed.
Yeah.
I don't want to own the REIT itself. I
Yeah,
looked at it,
yeah,
but the preferred shares kind of interesting for it because they're pretty depressed last I looked.
Oh yeah.
For people watching, like preferred shares, fair value is it's $25, but they can trade under that. And Rexford's, I think at the time I looked was like $17 or $16.
Yeah.
So I was like, interesting. I didn't do anything with it at the time.
Yep.
But I might revisit it.
Yeah.
So that's another way I might play REITs. Like I don't know if I want any more REITs, honestly.
No, there might be something there because like the preferred share, as far as the structure goes, compared to commons, there might be. Yeah. At least like conceptually,
I was gonna buy the hell out of the preferred shares of Triton.
Oh yeah,
I
yeah,
had them in my sights, dude. I was ready to drop some cash. There was I was ready to own like everything Triton, all the classes, and then
sure enough,
was it BAM who bought that?
Yeah,
Brookfield, right?
Yeah. It was one of the Brookfields.
That deal was shit. Did you read it?
I saw that. Yeah, I was
small
like
pittance of cash, and then it was mostly like BAM stock. I'm like, I don't want anything to do with this BAM shit. Like, no.
I was like, my knee jerk was like, this sounds like needlessly complicated for me.
If
I'm
you
looking
offer
for
me shares in a buyout, I'm selling.
Yeah,
I don't want your business because I didn't evaluate your stupid business buying mine. I'm out. Like Travel Centers of America, I bailed on that. I don't want British Petroleum stock.
Yeah. Oh yeah.
That was a beautiful day. I was in a conference. So I don't know if I was in a conference for like 4 straight days with like a federal training conference. And then somebody started posting about Travel Centers like innocuously. I hadn't said I bought it. And I'm like, what? I'm like, are you serious? So I'm like texting in breaks. And then I found out it like doubled.
Yep.
And I was just messing around with it. I had like quite a bit of shares. So I thought it was it was a good business. I did pretty well. I did truck stop. So Jay Nagy, I cheers to you. Jay Nagy made me a lot of money.
Fellow vet.
The whole joke about truck stops, I made a crap load of money off of truck stops. So. I'll have to tell him that if I ever get to talk to him.
Yeah.
What happened there, but oh yeah, another vet. So
yep. Oh yeah. Yeah. That was yeah, go figure. I gotta say though, like the thing that I like is again just learning throughout this entire thing. Like, because if I really sat and thought more about travel centers, maybe I would have been different on it. But like, I missed out on that one, and I missed out on Musa because like I thought to myself, I don't see the top line growth. Yeah, that was me being dumb.
Oh,
and here I sit poor for it.
So I'm torn on Musa. I'm gonna finish this. I'm looking at Big Pharma shill got me actually looking at.
No, force him to collaborate with you. Force him to do a collab. Get him on live. Do it. Get him on live.
Big Pharma shill. Let's go.
Big Pharma shill. Yeah, let's go.
Shill me, bro.
Yeah. He won't come on. He's too scared.
Sadly.
Just hey.
I think the Big Pharma shill would be great value.
Just tell me what the growth rates you're projecting are. Okay, that's all I need to know, man.
Just great.
You want me to go to their headquarters? I'll go knock on their door for you. They're like 15 minutes from my house. So
Yeah, there we go.
give me your growth rate.
Give me your growth rate. Well, that's the thing. Like when people are like, "Oh, dude, plug this in stock in or whatever," I'm like, I have no idea what this company even does. Like, I can get like just going off of historical data, I might be able to do like a reverse DCF. But like,
Yep.
what are you projecting that it's gonna like grow at? Like, are they gonna have margin contraction, expansion? What's their top line gonna be? Like, I don't know. You know,
Everything grows at 69%.
Or to quote Dex Invest earlier, who quoted from other people, just slap a 30 PE on it.
Yeah.
Come on, guys, what are we doing here? All this brain damage.
I have so many layers of sound in that video I made for him.
Oh yeah.
If you probably like, there's like 10 different sound effects in that video.
I thought there were a lot of great videos in that contest.
Wait, maybe I should. I can play it, right?
I don't see why not.
No, big pharma. I know it's not going to look good. Recently, I'm looking at 5-year growth rates too, right? So I'm almost like looking at normalized, because obviously we got this huge cyclical pump, but you can see it kind of resumes trend line through 2022, 2023. Obviously, you know this, but I'm wondering if that trend line is actually going to resume. So if like we take the 2 data points off of the last 5 years, we're getting about a 15.7% 5-year average CAGR, with a little bit of margin expansion, and looks like maybe a little bit of normalization off of COVID. But like, so if we just assume like flat, let's see, flat margins with 15% top line growth, it's going to be about 15%.
Slap a 30p.
Woo!
Did you hear that? Sorry.
I heard it.
Case 17.5, 600. But and
All right,
that
I'll
seems
show-
like a multiple of 5.8. I don't know.
This was my intro video for Strongman's thing.
Yep.
Slap a 30p on a stock like this. 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 My stock's just.
Okay, nobody noticed this probably.
Yeah, I noticed that one.
Stockmost cat. I had to put that there. It was so fast at the end.
Absolutely collapsed. And
Yeah, I found him literally saying my stocks got absolutely collapsed in a video. I'm like, oh, I'm clipping that.
So beautiful.
I got 3rd place, so
beautiful.
oh, that was fun.
Yeah. Yep.
What was the other one?
Oh, Musa.
Yeah, Musa. Good old Musa. The one that got away from me. The one that got away from me because I am dumb.
So I trimmed a very small amount, mostly just higher cost basis shares, because I averaged up into it a very small amount in the low 300s. So I just like took those off this last week.
Yeah.
But I still have like a solid like 3% position in it. But man, for Musa, I'm torn because they're so cheap that if we're going through a re-rating, like they could really get some momentum long term. If the market's actually re-rating them and not going to trade them at like a 8 PE or whatever, and is going to trade them at a more reasonable yield of like, 6% or something like that, could have some longer term momentum for it. I just don't know.
Oh, okay. No.
What?
I said slap a 30.
Slap.
I was joking.
Man, if you slap 30 on it.
Yeah.
What if 30p? What would it be like?
Oh jeez, I don't even want to imagine. But yeah. I firmly think Big Pharma show that you and Jesse should collab and arrange for a live or video of some sort. This may be me being greedy from value creation for the viewers, but that's just me. And Fuhad, of course, asking for BlackRock, Jesse.
Of course, Fuhad is asking for BlackRock.
Oh, is that showing up? I don't see it on the feed.
Oh yeah, yeah, it might be. Sorry, Big Pharmacial. Just looking for ways for great content to be shared. That's just me.
No, it's not showing on YouTube. I don't know why.
Yeah.
So if you slap a 30 PE on it, it's like what, like a $700-800 stock?
Oh my god.
That's what I'm.
Whoa.
Whoa. That's what I'm
That's
saying though. Is like if you, I mean that's too aggressive. I think
700. Boy.
if you slap like a, where it's trading at like a 6% yield, I mean current fair value is around 421. 1 year fair value could be around like potentially 5 to 550. So I'm
if
like,
that happened, well, who
So I'm
would
like-
be excited?
oh, I think a lot of us would be excited, but yes, we know who would be very excited.
Pretty nervous about.
Well, I'll quickly mention Meta results are
no.
out. We are going
Meta!
down. The stock's initial move is
It's
down.
not even on the website.
Yeah. Mike, just to go back to you, I mean,
What's going on
it's
here?
been a mixed bag, I would say, in terms of earnings, and we're even seeing it here. And we're going to go to Julia Borson because we do have those Meta results
Meta,
ready.
here we go, folks.
Julia.
Here we go.
Meta beating on the top and bottom line.
Let's fucking go!
Earnings of $4.39.
Oh!
Estimates of
yeah!
63 cents per
Oh, yeah!
also coming in higher than expected at 34.1
What a beat!
billion versus the 33.5
What a
billion that was.
Good.
What is
God.
not being stone cold?
Jeez, that.
And then it went down after this.
Yeah. So go figure. Like the whole idea of investing is to be like tempered and moderate. But no. Let's hype the
He's a-
crowd up.
Oh, we're
He's
long
an entertainer
term.
/ gambler.
Oh jeez.
Let's fucking go.
Yeah.
Like,
Yeah.
what did he even look at? He just
I don't
saw
even
like that
know.
they said it beat. He didn't even know what the hell they're talking about.
Yeah, that's
Oh
all he
my
needs is the
Jesus.
Dean scream. Just yeah.
Ooh, audit finance junkies. You know what? Like, I watch finance junkies. I don't want to bash them. Like, they have their own take. I don't know. Like, it's fine.
I steer clear. That's just
Like, I watch
Is
it
that
when
the
I'm
guy
bored at
that
work.
bought Enphase? Like,
Well, it's
really
like a
heavy?
Mitz crew.
Yeah, it's Mitz.
Yeah.
Oh.
But like, I'll critique their guests. I don't want to like. We don't need to guess like host versus host fight. Like,
Yeah.
some of their guests are degenerate as fuck. But like, I like the because some of them have vastly different opinions on investing than I do, and I appreciate it. I like to listen to it. I want to hear these tech people that are like, they think like anything tech related is the future and it's gonna just blow out the doors of anything. I want to hear them talk because I'm curious. I think they're nuts, but it's fine. But yeah, they got a good crew, so
There we
it's
go.
entertaining.
Some better lighting.
Yeah.
That's what I've said to people. Like, look, you should listen to some people that you think are idiots online, or you just don't agree with their thinking. But you should hear what they're
Listen
saying.
to the listen to the idiots, because then you can short like Dan.
Oh no.
Yeah, it happens sometimes.
Oh no. Oh no.
They should know I'm out there and I'm watching.
Oh no.
And I'm a dividend guy, but I'm watching you. So I'll find your shitty investments. I'm watching you, Sofi.
Oh no.
Oh man, I wish I'd kept shorting Plug Power, but
Oh
rode that
yeah,
from, like-
Plug Power. That was.
I went from like 25 down to 12, and then I bailed on it. But now it's down to like 4. The company's degenerate as hell.
Yeah.
I people like I literally don't want to say some of the shorting. Like, I find research and they can sue you. I don't know. I'm not putting it in public because you can get sued for some of the allegations you could say. But
Dude,
they're like, "Well, you're too small." I'm like, okay, I'm not doing it. But there were some
they
troubling signs I
peaked
saw
at $63,
Mm-hmm.
$65.
The company has questionable accounting, so
We'll just leave it at that politely.
but it's so cheap now. I just like I don't really like. There's not enough juice in it at this point. I bailed on Virgin Galactic. I just felt like being that one's about to go bankrupt too, though. But I got out now. Oh, they're in trouble.
Uh-oh.
They're starting to lay off workers and closing
Uh-oh.
sites. I already said I'm like Virgin Galactic's going bankrupt. It's just time is the question. So
Yeah.
but companies doesn't make sense. So oh, gotta love it. That's the one good thing about higher interest rates, though, is that these clown companies that don't make money, they can't sustain themselves. So this is culling them. You know, it just might take more time than you think, but
Oh, for
you know,
sure.
the rate environment we're in right now, like these non-profitable trash companies with no future projected like exist, like they can't get to profitability. Like, what the fuck are you buying? And,
Oh yeah. Yep. Survival matters. Survival matters in this space.
I just think people don't appreciate on maybe like in retail. There's like going from like a business started in a garage with like two buddies to a company listed on like a stock exchange to a profitable publicly traded company that's growing. It's fucking so hard.
Oh yeah.
The hurdles to get to that point.
Yep.
I mean, like the odds of from start to finish without being bought out or something like that or going bankrupt, like it's so hard. And like they don't appreciate like how hard it is for like SoFi will just become JP Morgan. It's like, do you know how many banks have tried to become JP Morgan and are like dust piles in the wind at this point?
Because a billion market cap is pretty small, I think that's safe to say, as far as like publicly traded stocks goes. But a billion is still a really big number. Like the efforts to get to that size, even
like
still,
Palantir. Palantir's been in existence for a long time, like 20 something years. And like they finally right now on the cusp of being a profitable, growing free cash flow business.
Yep.
They're like right there. They're just about to turn. Like, good, but it took 20 years. How many AI companies or software companies didn't make that? So it's really hard. And a lot of them don't make it. So
Yep.
That's
Survivorship
why
bias.
index makes sense. Yeah. And that's what is going to kill these Tesla people because they just by luck they got it. They nailed the one that made it, and they think they unlocked the code, but you didn't. You just picked the right one. You know, certain people win the lottery, right? It doesn't change the odds of winning the lottery. So that's all right. You look what happened to Meet Kevin. He picked it and he wrecked himself.
Yep.
So did Jeremy.
He went from like what 40 million to like 15 or something like that.
Yeah, he got. I think the height
wrecked.
he had like 40, 50 mil. Some of it was margin. He got cut in half at least. And then I think he almost got cut in half again. So I think he probably went from 40 to 10 or under 10 million. Like you can't even stress how he just destroyed himself. Like,
how's his ETF doing?
I'll take a look. Why not?
Well, that's a video you can do.
I'm gonna look as well.
Trade Desk. I don't know anything about that, but that'd be for someone else. That was one of his stocks got wrecked. So
yeah, this one. That's right. This one has a funny max chart.
It is up 9.8% over the last year. It's underperforming the SPY and the Qs.
For a little while,
if you year to date, bro, it. Yeah, year to date, bro, it.
Yeah. No, it's like the tortoise and the hare. This is like, the market versus PP.
Yep.
It's the same thing as ARK versus Berkshire. If you look at those are hilarious charts. Like during COVID, like ARK went like this and Berkshire just slowly creeping along and then eventually
did you see
Berkshire got the win?
So I get emails from ARK on their like daily buy sells just because I'm curious. And I think it's hilarious. They're buying something that literally has 10x in the name. Like the name of the company is like 10x biotechs or something like that.
Big Pharma Shoal, they're stepping in on your Discord brand.
Yeah, it's
so funny. It's like 10x bio something. What the heck are they doing?
Oh my god, they're almost 10% Coinbase. Bro,
dude,
I'm not gonna say here, but
if they would have just held Tesla, and I don't think they can because of regulations over ETFs with 10% positioning. But man, if like you just hold it,
guys,
just held it.
I might make a move on Coinbase. In my degenerate methods, but
Oh,
Okay.
oh,
I think there's trouble in the wind, but
yeah.
now that I see ARK is 10% Coinbase, that's kind of positive sign for me. So I think I don't know, these crypto ETFs are bad news for them, I think. I don't know. That we'll see. Oh, well, we're at the 2-hour mark.
Oh yeah, yeah.
So
Yep.
wow, still 8 people.
Hey, we
bad
got to
boy.
get you those 400
I know.
hours of streaming. Let's go,
What
guys.
should I? Yeah, I should
Get
pump out a
400 of your
Chabab
friends
video.
on here, and we'll go for another hour.
Dear God.
Come on.
I don't know what happened with this. I just all of a sudden it's like, well, I kind of thought the checklist video would do well, and then I should do the other one, I guess, the next one. But I don't like the people who do the next one right away. I'm like, fuck you. I'll do what I feel like. If you tell, like, I'm like
That's
like,
right.
kind of like Chris and me are like, army guys. It's like, if you tell me to do something, I'm just gonna do the opposite out of spite because you can go
Yeah.
fuck yourself. Like,
Oh yeah.
Mhm.
so,
Oh, besides that, like
I don't
still-
care. I really
yeah.
don't give a shit. Like, I do the videos I feel. I don't
Yeah.
think Moat's gonna get a lot of views, and
Oh.
my book review I thought was gonna get nothing. I don't care. I
Yeah.
did it because I felt like it. So
I like, and I remember, like, I've been guest on your live streams long enough to know, like, you still have some great ideas out there that you mentioned in the past that I'm sure like will come out in the future. Like one that you mentioned with realtor friend of yours. If they're able to, like, I know that one would be a cool one, but I know it'll come in your time. Like,
yeah, I
Yeah.
forgot to ask her.
yeah, it's fine.
She's
Like,
really fun if I do get a live stream with my real estate agent.
yeah.
She's a really fun person. She's a killer though.
No,
Like,
I
she's
don't doubt it.
bubbly.
Yep.
She wears like unicorns and rainbows. She is a killer. They're her real estate company. They cap how much their commissions they take. So they take a fee.
Mhm.
The company that you deal with.
Yeah.
She maxes out in like April every year,
Jeez.
which is crazy. It's crazy that she's able to. That's how many deals she does, and yeah.
Because like aren't like those like late winter, early spring months, especially for us like more northern people, like aren't those in theory the not as attractive buying times?
I'd have to ask,
I forget. Yeah, like I'm working with like old data here, like anecdotal.
but I
data.
text her because I might buy a apartment
Yeah.
next year.
Yeah.
I'm really thinking about it.
Hey.
I don't know.
Apartment?
Yeah, I might buy like a duplex or triplex.
Hey.
Oh, okay. Rental?
Kind of putting my finances in order to do it potentially. So
Diversification.
Man, why buy that when you could just buy MPW, bro?
that's another reason. Well, that's another reason. I'll probably honestly, if I do this, I'll probably sell all my REITs, which I only have like 4 left. So who cares?
Yeah.
But like, there's my real estate exposure. I'm good with the
Yeah.
REIT.
Yeah.
Remember, according to Mo, you need to buy a REIT ETF to get real estate exposure, even if you buy the S&P 500.
Oh my God, did he really say that? Oh my
Yeah,
God, no.
He literally said that, and he
Oh.
put a slide of the 11 sectors of.
Oh yeah, he did.
And the first one was real estate. The man is a complete moron. I could not believe. Like, I love when Chris goes after him. I love it.
I want to
Slow
slam
mo.
my head against
I
something.
never know if you're talking about stock mo or the other mo.
Everything money mo.
I don't
It's
know
everything
stock
money
mo.
Yeah.
Yeah, I don't really.
Yeah.
I only know him through you
Good
guys.
You
God.
knew his cat.
Yeah.
I know his cat because of jokes people make. I don't even know what the joke is. So.
Yeah.
I
To
guess
the
he had
viewers,
a cat, so
to the viewers out there, I left everything money for a reason, as like a viewer, subscriber, person, fanboy for a while there. Like, yeah, I'm ashamed. I am ashamed.
Don't be ashamed.
Yeah, I own up to it though.
I've got more to be ashamed about than you do, man. What are you talking about? What are you talking about?
Yeah.
yeah, they go
How I think of it, it's a learning experience.
Yeah.
You know,
At least I have
the,
hog excuse.
the important part is that you saw through all the shit and you're like, eh. So
Yeah.
Yeah.
Oh, good God.
Well, with that, wish
Yep.
everyone a good, a happy Veterans Day, or I guess
Yep.
we say happy Veterans Day from
yeah.
2 vets and Jesse's here. So.
Yes.
Yeah, some family with maybe you have some vets in your family. But
Yep.
Thank
go
you for
get
my
a free
freedom.
breakfast and a free car wash, and go to Home Depot and get your discount tomorrow. Some people hate the military, and I'm just like, freedom doesn't come without a price, and people willing to defend it. And you can look at Ukraine, and freedom doesn't come free. It really doesn't. So you have to appreciate that there's people that are willing to go to, I was proud to go to Afghanistan, defend this country. So I'm one of the people like, I enlisted like 3 months after 9/11. Like, so I don't know, like younger people don't understand how devastating you can't appreciate it. If you're like a baby, I mean, what the hell did you know about it? But it was a devastating event, and I'll never forget it. So, and there's people around you that are like my age that raised their hand and went to war 3, 4, 5 times, so you should appreciate them. So, and
Absolutely.
You shouldn't make 9/11 jokes. I see, sometimes I've seen them, but be careful. It's a very traumatic event. Like I watched a 9/11, like a 9/11 documentary, like I can't do it. Like it's too much for me.
Yeah.
But just appreciate that there's people in America that will volunteer to do that stuff. And we're in the fucking greatest nation in the world. So that question. So
I got my Wubby and my DD Farm 214. So
now we're gonna make people cry.
Yeah.
Pussy. So thanks for joining. Thanks, Jesse, for coming on.
Yeah, thank you, Jesse. Thanks, Dan, for having me.
See you later on the next one, whatever it is. So